to tell me substance equals spin. The propaganda's a win, stress feeding on my tension. My countrymen, they love their fiction. Words upon now, it's made with good intentions.
Welcome to 1 of 200, the Politics and Media podcast. We're running another midweek episode that might drop on the weekend. Let's find out in about 1 week. I'm joined by very special guests, returning with a different hat on, Kate Stone, campaign manager for Better Taxes. How are you doing?
Kia ora, I'm good, thank you.
And tax specialist, international tax specialist, Nick Miller, who's been working with the campaign. How are you, Nick? Welcome to the podcast.
Kia ora. Thanks very much for having me on.
Kate, do you just want to quickly give a quick intro about the campaign? And then we'll hand it over to Nick to introduce himself as well, around what kind of stuff he's worked on previously and what we're looking at on this episode.
Yeah, sounds good. Kia ora, everyone. I kind of come here with two hats on. I work with both Tax Justice Aotearoa and the Better Taxes campaign. Tax Justice Aotearoa is a membership-based incorporated society that was set up in 2018. And that group is a growing number of people who think that the way our tax system is currently working isn't serving New Zealanders well, and that we could have better public services and we could have a more fair, less unequal society if we had a better tax system. With my other hat on, I'm the campaign manager for the Better Taxes campaign, and Tax Justice Aotearoa is one of the groups that's steering that campaign, but it's supported by a coalition of over 20 organisations. And that campaign is about saying that we deserve to have functioning hospitals and schools to prepare our children for their lives, and to have warm, dry homes and functioning public transport systems. And we can have those things if we had a better tax system. So we're gearing up for election year next year and campaigning to get changes to our tax system that will make New Zealanders' lives better.
Fantastic.
So thanks for having us on the show.
No, absolutely. Me and Nick were talking before we started recording around the difficulty sometimes with even being able to have these conversations in the kind of wider public discourse. There's both a complexity around the details of tax. People just also just switch off when the word tax is mentioned, but also in looking at the solutions, right? You mentioned that what the things that we want are hospitals and public transport and other public services that work, and even politicians that we'll just say on the right wing are going to say, yeah, we want those too, but we can't. And so looking at the ways in which we can, I think, is really important for empowering people.
Absolutely.
Nick, where do you come to this from?
I come to it really because the sort of subject matter, the sort of things we're talking about in the report used to be my day job, for quite a number of years. So I was working for Inland Revenue on these kind of issues, what multinational companies are paying, and before that in the UK as well. So it's in my wheelhouse. But obviously I'm very sympathetic to the broader objectives of Tax Justice Aotearoa. And I was very pleased to get involved about 18 months ago and be asked to look into this area, because this is one area where things have clearly got out of balance. There's inequity, and although it's only one part of a much bigger picture, there are some significant dollars here if we're talking about what tax means in terms of the real world. I mean, the sort of things we're talking about in the report show that there's potentially hundreds of millions just in this one small area. So yeah, I was very pleased to be able to do that research and hopefully to use a bit of expertise that I picked up along the way.
Fantastic. Well, as I said, thank you for joining us. Let's just crack straight into what you've been releasing. A report came out on September the 4th, which was titled. The media release was titled "Research Reveals Need to Crack Down on Tech Giants' Tax Avoidance." Now, this is a topic which I think it's kind of been floating around for about a decade. The way that some of the big multinational tech corporations like Facebook and Google have offshore headquarters or services or business pop-ups in other countries, headquarters somewhere else, and are somehow just paying no tax because they're too big to really challenge. Um, what kind of details came out in this report around this sort of issue?
I'll take that first. One of the first details to note is that these groups, the sort of Facebooks and Googles, are extremely profitable if you look at them on a global scale. Absolutely, there's nothing really to compare with them in terms of profitability. So they make plenty of money, and they also have quite large businesses in terms of revenue in New Zealand. But as we show in the report, they shift most of it out through a variety of techniques. That there's more than one way in which they do it. But ultimately, what people need to know is that there's a lot of revenue in New Zealand, and most of it gets moved out before we get a chance to tax it.
Are there like you've mentioned or I've mentioned both Facebook and Google, but how many of these kind of companies are there? Would Uber be another one?
Uber would be another one. If you look at Uber's financial statements, we didn't cover Uber too much in the report, but it's very similar in terms of the sort of techniques it uses. And some of the smaller ones, the sort of facilitation companies, you might call them, that use platforms like Booking.com, for example, those would also use the same type of techniques.
Okay, just from the I guess from a campaign point of view, what triggered the opportunity to refocus on this and to start considering it again as an area to target?
Yeah, there's a couple of things. I guess one of them is that Nick was sort of thinking about this issue and kind of drew this issue to our attention. But you may recall that earlier in the year, the government announced that it was dropping the digital services tax, and that was in basically response to concern that we'd face retaliation from the US, from the Trump administration, if we impose a specific tax that was targeting American tech companies, basically. And so that left a sort of hundreds of $1 million hole in our revenue that otherwise could have gone to
To
fund
landlords.
well, yeah, I guess. But, more positively, it could have funded 10,000 extra hospital places for elective surgeries, 1,400 social housing units. Last year, the government cut the school lunch program by 130 million. So these are all things that we are not able to fund because we're missing out on this kind of revenue. So we thought it was an important issue to draw attention to, but also to think about, okay, well, if we can't adopt this digital services tax, what are some of the alternatives that we could pursue?
So the word avoidance when it comes to tax is kind of thrown around a bit. But then when it gets into the political discourse, people get very careful about exactly what they're saying, right? Are these companies really avoiding tax? And you often get uh, the line run out. Oh, but it's all legal though. It's all legal, so there's nothing we can really do about it, and therefore it's somehow ethical. Uh, but there are a number of ways you mentioned, Nick, that companies are able to offshore the money that they're making here. I guess what's your take on how far over that line this stuff goes? And can we put a line in the sand around the ethics of it?
Yeah, I mean, it's interesting to think about whether it's abusive in terms of what people see as tax avoidance. I would say that it does cross a line to some degree because it relies on these payments that they shift out, being mischaracterized. Because without going into all the details, these are labeled as service fees, and our argument in the in the report is that these are most likely to be royalties, and whether those royalties are excessive or not, they are still subject to would be subject to tax in New Zealand at source. That's in the rules. That's in the existing rules that we have. So if they're mischaracterizing those payments, then yeah, I mean, I think I described it as a dodgy, which is a non-technical term, but it's it's. I mean, I suppose in terms of whether it's legal, they would say it's legal until a judge tells you it isn't. Um,
Uh-huh.
but uh, but then we have to test the law. It would be our view from that what we say in the report. We have to test the law. We have to use the existing rules that we have, and then yeah, a judge may have to decide. But unless you ask a judge to make that decision, we're not going to do anything.
And interesting that no one has asked a judge up to this point. So we're talking service fees. Is this, let me see, just putting, I'm a lay person as it when it comes to tax. So let's see if I'm understanding this correctly. The part of the company, so the Google New Zealand or whatever, or Facebook offices of New Zealand, they pay the service fee to their American headquarters. Um, and because they're paying it as a service fee, it looks like part of their costs. And then that brings down the amount of money that they seem to be earning here. And so they pay less tax.
Absolutely correct. Yes, and I mean it's probably I mean the amount they're paying out is absolutely gigantic though. If you look at the scale of it, for example, I think Google pays out about 97% of all the revenue it earns.
Wait a second. That just immediately seems, as you say, non-technically dodgy.
And Facebook would be very similar. Uber would be, yeah, I mean the percentages vary, but it's most of it in all cases. So the question is, if you say that's a service fee, what services are you getting? Do you need those services for a business the size of New Zealand? Probably not. But what do you use in order to drive the business in New Zealand? You use intellectual property because that's what drives these companies' businesses globally. So it's very likely that at least part of that payment is a royalty and maybe all of it.
Right. So just for using those systems.
Just for using them, because you need to have access rights to be able to use that intellectual property to be able to generate revenue.
But they're still part of these companies, right? So why would they? That's so bizarre. I'm actually speechless around like
Well,
the
I,
ability
I
of them
think
to do this.
I think when people hear it, sort of over 90% of the revenues are shifted out, then that's quite stark, I think.
And does that, because that's the kind of thing that would almost seem to have to be decided um, post revenue gathering to keep the number that high, as opposed to being contracted as like the service cost. So do we have any kind of read on how those service costs are even generated? Or are we just past that point at this stage?
Well, there's nothing in the financial statements that would give a clue as to that. All we can see, and most of the financial statements are presented in quite an opaque and confusing way anyway. But we can, if you dig deep enough, you can see that large payment out. And that's a service fee. But as you say, I mean, what are those services? It's normally, yes, you would expect there to be a service contract, a list of services provided, and for that to be certainly in a transaction between group companies to be priced at an arm's length price. That's but we don't know whether that happens. All we do know that there's this enormous payment each and every year in the 90%.
And what does that mean for this particular technique that they use? What does that mean in terms of the amount of tax that's available here in New Zealand?
Well, it means that for example, I mean, Google's a good example, I guess, because it's nice, almost nice round numbers. It's about what 1.2 billion revenue and about one 1 billion at least paid out in the service fee. So, and then you still have, and this is interesting, you still have a large wage bill of, yeah, because there are some very high earners there. So that's another thing that's quite peculiar in which we draw attention to in the report. What are all these people doing? If you're paying a vast service fee out and you're still paying a lot of people high salaries, that looks a bit odd. But then what it means ultimately is that the amount of tax paid is down to a few $1 million. Um, but uh, if we look at the numbers, that billion that goes out, if that was subject to withholding tax, because we say it's a royalty, then that's at least 50 million in tax, and it could be more. So,
That's, I
and that's
mean,
one company. So you
yeah.
replicate it across the sector, you're looking at a significant amount of revenue, tax revenue.
And as Kate was saying earlier, that that's like there's a very clear other things you could be using to like that for that are extensive. It's not just a few dollars found down the back of the couch, right?
Not at all, no. If you we think it could be 200 million plus a year. I mean, you look over a 5 year period. I mean, that's a hospital at least.
I think you make another point in the report, Nick, about the wider implications of us not dealing with these kinds of practices and how that incentivizes other companies to adopt similar practices. And I guess as the share of the economy that is directed towards these kinds of services, the digital economy, the more and more of our tax revenue that we are at risk of losing if these kinds of practices become more prevalent.
Yeah, no, absolutely. The digital part of the economy is obviously expanding, and yeah, if these techniques become, yeah, standard, if you like, then we are going to lose a lot of lose a lot of tax revenue. I think one can see from these companies, these groups saying their global filings is that a lot of countries are grappling with this, are in dispute about the kind of issues that we talk about in the report. So it's not as if we're going out on a limb in that sense. There are a lot of other countries that are dealing with exactly the same issues in the wake, as Kate says, of the loss of the digital services tax.
Yeah, and I guess just in terms of the kind of uptick in digital services and those big conglomerate companies, even just in the last couple of weeks, we've seen this kind of PR nightmare for the National Party over Amazon, right? Like, what happens when we've got kind of big physical builds that start occurring here in terms of building data centers or other infrastructure, which they are basically putting here for free. And we're providing like the logistics, the roads, the power, the transport, the homes for their workers, et cetera, et cetera, et cetera. There's all this public cost to these things that just isn't returned in any like not even in terms of the maintenance needed for these organizations to exist here.
Yeah, I mean, I think that's a really crucial point from our perspective is that, you know, tax is not just money. It's all the things that it maintains that help us to live good lives. And as you say, these companies come here and they use our infrastructure. They use people who are educated in our schools, and they rely on the hospitals to look after those people, and all of those things. They're generating profit from the investments that we have made in our own people and in our own society. They're generating profit off that, but they're not contributing back to maintain those things. And that's not fair. And I think most New Zealanders wouldn't think that that was right. Particularly when you think about, as Nick was saying, these are highly profitable global companies. It's not like they don't have the money.
Unprecedentedly, right? Like in the history of human civilization, nothing has been generating the amount of profit that these organizations do, that these businesses do. So yeah, wild that they're even trying this. No, it's not wild. Of course, I expect them to do this. Like, who am I kidding? We're a left-wing podcast. So this is one way they do it, is with these service fees. What other kind of ways are they minimizing the amount of tax that they're paying locally in New Zealand?
Well, one other technique is less common now, but you can still see it in some areas where they simply don't book the revenue in New Zealand at all. They earn the revenue here, but it gets booked somewhere else. And what they have here is they structure themselves in New Zealand as a service company and get a very small markup on their costs from the overseas affiliate or the parent company. So again, we get very little tax, and all the revenue is booked overseas.
Isn't it just cheating?
It's there is again. It we mention in the report that there was some legislation introduced back in 2018 which should have put a stop to this, but somehow hasn't. We're not. I don't think we're entirely clear why that hasn't happened. But the big offenders here are, and again we cover this in the report in some detail, are the two credit card companies, which we sort of think they're sort of part of the digital empire themselves in a lot of respects. And they both do that. They book all the revenue they earn in New Zealand from card transactions, which is a lot. We think it could be a billion at least, $1 billion at least in a year, judging by the number the gross value of card transactions, and that all goes offshore, gets booked in Singapore. That's very clear from the financial statements they used to have to make public. But what another thing that's interesting now is that because they make so little revenue, that they book so little revenue in New Zealand, they don't even have to publish their financial statements or make them publicly available on the company's office website.
This is
So
seeming just like entirely intentional all the way up up the
yeah,
trail.
yeah,
I mean,
it's
intentional by the
it's
companies, obviously, but like also by the legislators.
yeah. I mean that would be an easy fix actually, just to change the law to at least to force them to be more transparent about what they were doing in New Zealand or what they weren't doing in New Zealand in terms of booking revenue. And that's one of the recommendations we make.
So that's part of the service company kind of situation where they book the revenue offshore. The third model that you mentioned is the inflated license fee. How does that work? How is that different from the service fees?
It's different because it's labeled differently. It's it generally tends to be a technique used by this sort of the slightly more established software companies, talking Oracle and Microsoft.
Yeah.
And we talk about Oracle, and we can see that their the profit they returned fell off a cliff when they started to pay their license fee to Ireland. Strangely enough, this was back a few years ago, and so that they are virtually making no money in New Zealand. As we say in the report, that most of their revenue is actually interest income that they earn from lending money to their Irish parent. who gave them the money in the first place.
Similar to the service fee, they pay higher amounts offshore, which makes their revenue or profit here look lower, so they don't have to pay tax on it.
Yeah, and Microsoft have a slight variation on that because they don't pay that they pay about 1 billion offshore, but they call it purchases, even though obviously they're a software company, so it looks like a licensing fee for software, which again would attract withholding tax as a royalty, or should do, but they called it something else. So in effect, it's somewhat like the service fee in its effect, but this is a sort of a software company variation of it.
So you mentioned, and this is just ludicrous, like how on the nose these tax minimization or tax avoidance methods seem to be. So say openly it's intended to be non-transparent, and also seemingly how easy it should be to fix. Not like obviously not discounting the amount of pressure that giant multinationals are able to exert, right? Like obviously there are going to be political and business kind of pressures at play here. You mentioned that like for the service fee or maybe even for some of the licensing fee stuff, you could just make stuff look more transparent by with a small change to legislation. But you also say in the report that there are a lot of these issues that could be solved just with existing laws.
Well, that's right. The fact is, I mean, this comes down to how you characterize the payment. But if our view is that they're most likely to be wholly or partly royalties, these payments, and the existing law is quite clear that they attract a withholding tax. That is tax that we retain in New Zealand, even though you make the payment, you shift the income offshore. And that can be as high as 20% if you don't have treaty protection. But because we have tax treaties with the United States and Singapore, for example, that withholding tax is reduced to 5%, which is how we calculate the sort of the tax that we say is being lost because we're assuming that treaty protection will apply. But it's also important to note that if those payments are excessive, which they could well be, given the size
It
of them,
seems like they
um,
might be.
then that treaty protection wouldn't apply, and therefore the 20% tax applies, and therefore we're into very big money then.
So the numbers you were talking about earlier, around the 50 million, that would be just under the 5%.
They'll be on the 5%, yes.
Wow, And are there other existing laws that could also be utilized here, or is that the really the main one at the moment?
Well, there's another one, the 2018 law that we talk about in the report, which is aimed primarily at the other sort of variation on it, where they book the revenues offshore, and it strikes me as strange that hasn't been used, for example, looking at the credit card companies, um, because it seems that's set up to avoid New Zealand tax. I mean, what else can it be designed to do? So, I mean, there's that, and that's on the statute book, and that's not linked to the digital sector per se. It's not something which would be an obvious target of the Trump administration. It's something that's been around for 7 years or so.
Hmm. Any thoughts on what is stopping that from being done? Because this would just like the current government is in need of some cash to fill those fiscal holes, right? That we're seeing in the news a lot recently. These seem like relatively easy fixes that could turn over some of that for them pretty easily. Whether they spend it on hospitals or on schools or other good things is another matter. Um, is it just a question of political will, or is there a kind of feeling that people don't quite understand or grasp what is possible here?
I think it's probably a mixture of both of those things. If you look at inland revenue, have probably been distracted for quite a number of years, what with COVID and its response to that, then with the digital services tax, and then with potential other multilateral OECD sponsored solutions, none of which now look as though they're going to see the light of day. And at the same time, they've lost a lot of expertise. So these things are although I guess in the report we they sound straightforward, they still need to be investigated. The facts and circumstances around this still need to be investigated because if you want to put something like this before a judge, then you have to have built your case. So there's a degree of expertise and knowledge needed to do this, and as you say, the political will to actually test the law. If you look across at Australia, then they've taken a number of cases over the years to the courts with varying success, but at least they've done it. And it's important to test the law in New Zealand to see where we stand with these, because if those existing laws aren't adequate, then we would need to look at what we would need to do.
With the kind of case in Australia and some of those tests, is that something that we could piggyback on and say, look, this is how it worked here, and use some of that in our judgments, or is the legislation or the legislative framework just too different?
I don't think it's very different. Australia would have the same sort of treaty network and treaty rules as we would. I don't know. Obviously, you start with the domestic law and royalties that Australia has. Is relatively similar to here, but but I think ultimately Australian judgments are influential in New Zealand, but they're not the law. Whereas if we had the New Zealand courts reaching views on this, then that would tell us where we stood and what we needed to do, if anything, to strengthen the law.
I guess then, like, the question comes down to what should I guess politicians do as a starting point on this, and is there other things to focus on that the public can look at, or put pressure on their MPs around, to get some of that across the line? Because I'm not particularly like, you said, Kate, that you're looking at 2026 election, and kind of trying to have it as an election issue, when this is one of the best times to apply pressure. But in terms of the current right-wing coalition government, it really feels like they're just going to do what they want to do.
Yeah, I mean, I think, and Nick, you may have views on this as well. I mean, I think one of the important things about this work is that I think it, as you sort of pointed to earlier, it sort of has potentially bipartisan appeal, because what we're talking about is using our existing framework to crack down on some of the largest companies in order to generate revenue that we sorely need. So I think there's a real case to be made that this could appeal across the political spectrum. I mean, I think the recommendations in relation to this report are kind of three, right? There's one which is about directing some dedicated resource within IRD to actually investigating and enforcing the existing law. As Nick was just saying, you actually need to have skilled people do the work to identify what's happening, and so you can enforce the existing law, whether that's just through IRD taking enforcement action or whether it's through the courts. And actually looking at our existing legislation and checking if there are loopholes, if there are things that are enabling these tech companies to use these techniques to mischaracterize their payments. Do we need to make some tweaks to the law to tighten that up so that the law is having the effect that we intended it to have when we made those laws? And then the third thing is around increasing transparency. So Nick mentioned one piece of legislation which we could tighten up, but there's broader recommendations around public country by country reporting, amending the Companies Act to require all subsidiaries overseas headquartered companies to file accounts publicly. So, I think that's a really important one, because without that transparency, as Nick was saying, some of these financial statements are really opaque, and it's very hard for us to tell what's going on. And so until we have good information, it's really hard for us to make good policy. So it's those three things that we think that we should be putting pressure on the government and also other political parties to commit to looking at and investing resource in, and looking at reforming where that's required.
Nick, did you have any thoughts on those recommendations as well? And I think, or for even for both of you particularly, how how do you communicate that? How do you get people excited about that to actually put the pressure on? Because there is a level of technicality to them or complexity to them that, as we said at the beginning of the episode, it can make it really difficult to get that political will turned around.
Well, on the first on the resourcing, just to go back to that for a second, I think, I think if there was political will, then Inland Revenue could be resourced to deal with this, even if it meant sort of bringing external people in. There's still a lot of tax expertise in the private sector, for example, that in New Zealand and in fact in Australia. So there's talent to draw upon if you genuinely want to tackle these issues. On the communication front, yeah, these are technical and nuanced issues. I think you can get some of it across by the sheer scale. Like if somebody's paying 95% of their income away, that looks questionable, at the very least. And those kind of facts, that the sort of the most those kind of most surprising and stark facts are the ones that we probably need to bring out that people aren't aware of.
Yeah, absolutely. And I also think, it's I guess it's a tactic, right? To say like, look, this is all very complicated and the average person can't have an opinion on it. And we just simply don't agree with that. I mean, tax is about how we pull our collective resources together to fund things that benefit all of us that we wouldn't be able to pay for by ourselves. And so I think it's really important that people feel empowered to speak about these issues. You don't need to understand or be able to explain all the technical details, but the point is, at the moment, large corporations are not paying their fair share. They're making profits out of our resources, our infrastructure, our public services, and they're not paying their fair share. And I think New Zealanders can rightly ask their political leaders to invest resources in cracking down on that, and on ensuring that our tax laws are fit for purpose, and ensure that those companies are paying their fair share, and New Zealanders aren't having to foot the bill for some of the biggest companies in the world. And if we do that, along with a range of other measures, both in terms of corporate tax reform, but other forms of tax reform, then we will be able to afford good things for New Zealanders. And, I think people at the moment are really struggling with the cost of living, struggling to access their GP, struggling to afford public transport and nutritious food and all of that. And these are the kinds of real issues that could be tackled if the government took the bull by the horns and actually cracked down on corporate tax avoidance. So the short point is, people don't need to know all the details, but people can rightly say, actually, it's not fair that these corporations aren't paying their fair share when New Zealanders are paying their fair share and aren't able to access good services that they need to live good lives.
I don't want to open up a can of bees just as we come to the end of the episode, but what's the implication of this for kind of other sectors? I'm thinking particularly like the banks. You mentioned credit cards earlier, which is like financial digital transaction stuff, which is kind of connected to this. But there's been a history of New Zealand being taken advantage of by big corporates, and the Australian banks seem to have been a large part of that as well. Does that start to factor in further down the line?
Yes, I think it's certainly one of the things that I've been starting to look at myself. Uh, what the Australian banks' performance looks like vis-a-vis the New Zealand banks, and we look overseas as well, and we see, there are banking surcharges in a lot of countries, and that's not just because they're making super profits. It's because they're a very structurally important part of the economy, and the government is effectively the insurer of last resort in most of these cases, if a bank went bust. So um, uh, that alone suggests they should be paying a little bit more than they are. And then we come to, are they making excess profits as well? Well, that's a more complex issue, but it's something we're looking at.
Wonderful. Thank you so much for joining us. I think it's been a really good, concise, and simple explanation of the lack of fairness around some of these structures at the moment. It seems pretty clear to me, and I'm sure to our audience as well, that paying 90% plus offshore and service fees doesn't seem quite right. Kate, where can people find out more about this if they want to, say, read the full report or get involved with the campaign?
Yeah. So they can go to the Better Taxes website, and I can share a link with you to share alongside.
Yeah, I'll put it in the summary.
So they can access the report there. They can join the campaign there. And we also have a petition running, which is calling for corporate tax reform and taxing corporate profits better than we currently do. So really encourage folks to sign that too.
Any other resources that people can look for? Or do you want people to find you online? I don't know.
Yeah. Well, there's some resources on our website and on the Tax Justice Aotearoa website. If folks want to find out more about the kind of broader platform for tax reform, then they can go on there. So yeah, and we need all the people we can get to push for tax reform. So no mai, haere mai, everyone is welcome.
Wonderful. Any final points that you wanted to make, Nick, before we close this one off?
No, I think it's just getting across the fact that, as Kate says, that this is an example of an inequity in the tax system. It's part of a much broader picture. So this is just one little snippet, I think, of unjustness in the tax system generally.
Wonderful.
And we need to move on to discuss other areas as well.
Well, thank you so much for joining us. Thank you to our audience for listening. I'll put some of those links in the summary if you want to find out more information about these campaigns and these organizations. Share, like, subscribe. If you think other people might want to hear about this, and you haven't seen it around social media or in establishment media, get people to listen to this episode, send them the links, get a bit more buzz about these campaigns out there. We'll be back next week, I think, for another episode. But until then, we'll see you next time.
If artificers are, then I'm living a pointless life, but I'm learning all your lessons. Fucking politics, there's no distinction. The road's apart now. It's paid with good intentions, and I'll admit that I'm at a loss for what to say when they quote this as a cost we ought to stay. 'Cause I live amongst the people every day in this vindictive, forgetful fucking race.